Hey guys, this is a sources. I also will paste it in comments. The average Mercedes sells for 53,500 euros. The profit the company makes on that car is 2,650. 5%. That is what a grocery supermarket earns. Ferrari makes 111,000 euros on a single car. One Ferrari equals 40 Mercedes. And that is the good news. A year earlier, Mercedes earned 4,500 per car. In 12 months, the profit on one car almost halved. And nothing about the cars got worse. 2025. Revenue, 132 billion euros. Operating profit, 5.8 billion. Down 57%. Not during a pandemic. Not in the crash of 2008. Now, earnings per share fell from 10.19 euros to 5.34. Half the company's earning power evaporated in a single year. The company is 140 years old. It invented the automobile, and the market now prices it as if it might close. Look at how the gap is built. 132 billion in revenue. 110 billion of it is cost of sales. Just to build what was sold. 22 billion of gross profit remains. 9.7 billion goes to sales and marketing. 2.5 billion to administration. 9.7 billion to research and development. Mercedes spends more on engineers than it earns in total profit. At the end of the subtraction, 4 cents on the euro is left. But the interesting part is not how much Mercedes earns. It is what from. The company has 3 divisions. First, cars. 96 billion in revenue, 4.8 billion in profit. Second, vans. 17 billion in revenue, 1.7 billion in profit. Double the margin of the cars. And the third one is not a factory. It is a bank. Leasing, loans, insurance. A portfolio of 128 billion euros. 1.3 billion in profit. 15% of what Mercedes earns comes from lending money, not building cars. In the third quarter, the car margin fell to 1.8%. A savings account pays more. Now, why it collapsed so fast? Car sales fell 9%. 9% down, and profit per car fell 40. This is the trap at the heart of the car industry. A factory costs the same whether it runs full or 2/3 empty. Engineers are paid the same. Dealers, warehouses, warranty obligations. None of it shrinks with demand. 164,000 employees, a third of them in Germany. Capital spending rose 36%. Mercedes built its costs up for growth and got a decline instead. Now the 3 things breaking this economy. Start with the biggest. China. Not long ago, this was the best market Mercedes had. Not just many cars. Expensive cars, at the highest margin. In 2025, sales in China fell 19%. In the second quarter alone, 30%. For the first time in a decade, quarterly sales there fell below 100,000 cars. Xiaomi, a company that used to make telephones, sold 145,000 electric cars there. And it outsold Mercedes. A phone maker beat the inventor of the automobile. Discounts hit 10%, and 700 million euros were written off. Second, America. 25% tariffs on imported cars. 2/3 of the cars Mercedes sells there arrive from overseas. The bill for 2025, 1 billion euros of operating profit. 1 billion is the difference between a 5% margin and 6.1. A full percentage point, simply taken away. The answer is the plant in Alabama, running since '97. Production is being moved there. $4 billion announced. But factories are not built in a quarter. The tariffs apply today. The plant will work in years. Third, and this is a company publicly admitting it was wrong. In 2021, Mercedes announced, by 2030, electric only. Over 40 billion euros of investment. 4 years later, electric sales were 168,000, down 9%. BMW sold 442,000, 2.5 times more. The electric sub-brand is being dissolved. The electric off-roader launched under the old name, not the new one. A brand worth billions is quietly removed from the names. The promise of electric only by 2030 has been cancelled. The chief executive now says combustion engines stay deep into the 30s. And there is a second canceled strategy. In 2022, Mercedes announced it was leaving the cheap segment. Kill the small cars. Cut the compact range from 7 body styles to 4. Go up. Only luxury. In 2026, the small car was resurrected. The reason is simple and very telling. Going up did not work. The top models are only 15% of sales. And they fell too. The flagship sedan, down 17%. The factories have to be filled with something. So the cheap car came back. Mercedes has been here before. It knows what a wrong segment costs. Smart. Launched in '98 as a revolution in city driving. By 2013, accumulated losses were around $4.6 billion. Analysts put the annual loss at 500 to 700 million euros. At the peak, around 4,000 euros lost on every car sold. Every car sold made the company poorer. For 15 years. It ended with half of Smart handed to a Chinese partner, just to stop the bleeding. And that is not even the record. Daimler bought Chrysler for $36 billion, sold 80%, and netted nothing. Against that, 700 million written off in China looks modest. For now. So what is Mercedes doing? 5 billion euros of permanent savings over 3 years. Production cost per car, down 10% by 2027. In 2025, it already delivered over 3.5 billion. But the price of that saving is people. The workforce shrank by 11,000 in 1 year. Buyout offers went to roughly 40,000 German employees. Chinese office costs are being cut by a quarter. The company that built Germany as an industrial power is paying its engineers to leave. And that buys it 2 possible futures. Optimistic. China stabilizes. 40 new models lift sales. The savings hold. Car margin returns to 9%. Profit per car back to 5,000 euros. Realistic. Mercedes' own forecast for 2026 is 3 to 5%. The first quarter came in at 4.1, exactly on plan, which is to say a bad plan. Meanwhile, BMW, on almost the same revenue, earned twice as much. Mercedes is worth 57 billion euros, about 9 years of profit. The average car maker trades at 13 to 15, Ferrari at around 50. The verdict of the market. This is not a luxury brand. Luxury means selling few and earning much. Mercedes sells 1,800,000 and takes 2,650.